You're listening to the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.
Welcome to Volatility Views, the premier program for volatility traders. Each week, we'll take a deep dive into the world of volatility with in-depth analysis, trading activity reviews, strategy breakdowns, cutting-edge education, and much more. We'll also bring you exclusive conversations with the traders, researchers, and asset managers who are reshaping the volatility landscape. If it involves volatility, then you'll find it on Volatility Views. Volatility Views is brought to you by CBOE. CBOE is one of the world's largest exchange holding companies, and we're inspired every day to innovate some of the industry's most powerful products, technology, and solutions. We are the industry's leading force driving access to global markets, a better trading experience, and powerful data and analytics to inform better strategies. We're committed to engineering new ways to help our customers realize their potential and navigate the marketplace of tomorrow, today. Visit CBOE.com. That's CBOE.com to learn more about our expanded offerings. And now, it's time to take a deep dive into the world of volatility. It's time for Volatility Views.
All right, everybody. That music means it's time once again for Volatility Views, the premier program for volatility traders. My name is Mark Longo from theoptionsinsider.com, as well as, of course, from a little thing we like to call the Options Insider Radio Network. And, of course, a lot of you guys like to live in the network. I get it. I understand it. You like the content. We appreciate that. You get it on iTunes or via our app or maybe streaming from some other sites out there, so you can get it there. We don't hold it against you, but, of course, a lot of good content over there lurking on the website already. So if you haven't been over there in a little while, maybe you've been busy, head on over there. There's good stuff, great breakdowns. Of course, the radio's all there, too, so you can stream the shows from the site. I know a lot of you guys like to do that, too. Unusual activity, education, analysis, breaking news from the options market, all that fun stuff. So if you said to yourself, I don't get to over there as much as I want to, head on over there. Check it out. I think you're going to like it. If you like these shows, you'll pretty much like what we have on the website as well. And, of course, for all you hardcores out there, we make it available for you on the old live mode as well, so you can join us every Friday, noon Central, 1 p.m. Eastern, via the old, one second, got all things popping up here on my screen, via the old Mixlr, MIXLR, and, of course, however you listen to us, live after the fact, whatever it might be. Make sure you hit us up, questions, comments, insights, pearls of wisdom. Maybe you have your own vol analysis you like to share with us, and a lot of you guys do. Hit us up. We do. Yes, we do. Don't believe rumors to the contrary. We do like to hear from you guys. And joining me on the old Volatility Views show, let's see who we got. It's always a bit of a roulette wheel we got to spin when we're doing this show, listeners, to see who is joining us on the old hosting panel. I know Mr. Rhodes is playing his man about town game again. I believe he's in somewhere deep as dark as Africa. Who knows where the heck Mr. Rhodes is? Joining us, filling in on the old rotating CBOE chair, is Mr. Kevin Davitt, the senior instructor over there at the Options Institute. Mr. Kevin, welcome back to Volatility Views for the first time here in 2018. This is your 2018 kickoff show, sir.
A fresh start. Thank you. Thank you very much for having me.
Very excited to do so, and I do believe joining us from the hinterlands of Maine. Who knows what's going on over there? Is it raining? Is it snowing? Is it frozen? Is it 60 degrees? I guess we'll find out. I do believe we have the Rock Lobster, Mr. Andrew Giovinazzi from OptionPit.com by way of Carmen Line / the Prime Meridian Fund, forthcoming, TM. Mr. Rock Lobster, welcome to the program, sir.
I don't know how I have time to do all this show with all these funds we're launching. My gosh. And by the way, there's a sighting of Mark. He was in the Costco. He is okay, and his texting finger still works.
That man needs to stop going to Costco. Clearly, bad things happen when that guy goes to Costco.
But he's alive, and his finger's twitching.
I thought he died on air last year because he just froze to death in the middle of the show. Last week, I should say, just because it was all of a sudden he was just gone. And
he's alive. He's alive.
Well, all of our listeners can breathe a sigh of relief. He's alive. So if you're going to sign up for the forthcoming Prime Meridian Fund, at least he still lives. Meanwhile, let's keep on rolling right on into our volatility review.
It's time to break down the latest developments in the volatility trading world. It's time for the Volatility Review.
All right, everybody, welcome to the Volatility Review, the portion of the show where we break down the week that was and indeed still is from a vol trading and trending and analysis perspective. And oh, what a week it's been. You know, the bulls just can't get enough, kicking off the new year in high gear, setting new highs and new records pretty much all the time. And as we record this and stream it live, a little bit after noon central here, halfway or so through the session, the bulls firmly in control yet again, pretty much across the board, even on the vol screen, which is kind of interesting. S&P up about 0.5%. Actually, the laggard on the day, the Qs and the Dow up about nearly 0.75 of a percentage point up there. And good old VIX cash firmly, at least, well, maybe not firmly, ever so slightly into the double digits range there today, up about nearly 0.2 of a handle itself as well. So 2 sessions in a row now where we got the indices up and VIX up. So riddle you that, listeners. But of course, VIX cash getting as high as 10.25 today. So starting to move ever a little bit more firmly into the double digits camp. That would look good for my end of year prognostication. I know we got a long way to go until then, but I predicted a nice little higher level, a little juicier level of VIX. So it'd be nice to see a little bit. It doesn't have to start now. I'm not greedy. It could happen the last week of December. I don't care as long as it comes to fruition by then. But still, perhaps the beginning of a new trend, perhaps the beginning of a new regime. Seeing double digits so early in the new year. Who knows what that portends for the future? Mr. Kevin, I'm sure this has been catching your eye a lot over there. You haven't joined us yet this year, so we'll give you pride of place, give you a chance to go first. What was catching your eye this week and this ongoing dalliance here with the VIX kind of moving in lockstep with the S&P?
It is interesting to see days where we have broad markets higher and cash VIX higher. I think that I know that when you have cash VIX at historically low levels, so it's not all that surprising, but it is worth noting. I have to point out, and I'm sure we'll talk about it in greater detail, but the fact that despite lackluster ranges, as far as VIX is concerned, we saw the second biggest daily volume as far as VIX option goes earlier this week. So we'll talk about that in more detail as we progress.
Yeah, and I apologize for that noise, listen. I think that was something from our system here. One of our tabs obviously decided to start playing an ad somewhere. And you know it's always fun when you have about 15 tabs open, and they decide to just start playing something. Autoplay, which is not cool at all. So I'm actually going to have to close that tab, which is annoying because that's a service we use quite a bit. They seem like they changed their setup here in 2018, so we'll keep an eye on them. Meanwhile, Mr. Meatball, or Mr. Rocklouse, I should say, while I suss out the source of these weird noises, what caught your eye in this week's and today's volatility action, sir?
Well, I know. I was worried that it was me, but it's not me.
First appearance in 2018, you've already forgotten the mute button, sir.
I saw it, I had it, and I heard your fingers fumbling through all your buttons on your dashboard. So the thing right now is this was as an SPX trader, which was kind of you always had that position in the SPX, you're kind of short futures, short puts, and long calls in the SPX. It kind of is it is the lot of your position a lot of times. And this is kind of your least favorite couple of days where SPX is literally, what are we up? Like we're up 0.75% a day for the last 5 days, I think. Because we were just laughing in our chat room, like we were just trading 27.20. we were looking at those time spreads, and now we're trading 2780 and looking at the 2800. So the cash keeps getting pulled up, and what happens is, and the reason why VIX is kind of not going down is the liquidity providers, those guys, they're not going to let the at the money vol slide too much lower. Like nobody wants to sell, 5% at the money vol in the SPX 30 days out. So in order to combat that, they actually have to drag the skew up, and that pulls VIX up. So that's what we have right now. So if you're like a short future, short put person, you're having and I remember those days, you're having an extremely crappy day as the skew expands. So from a trade point of view, if you want to put on put butterflies in the SPX right now, things like that, you're going to get very good prices for them. Means they're going to be super cheap. So that's what I think, that's at least the way I'm looking at SPX right now. I think that's kind of what's going on. You have, and what's funny, you have almost 8% volatility at the money right now in the Feb 12 cycle. So for your VIXy number, they're not, that vol per strike has pulled up today a little bit from the price yesterday. The 2780 was, I'm looking at higher vols all the way up this week in the strike. So it's been gaining, kind of gaining. So the idea is you expect sometimes VIX to be pulled up a little bit when the SPX keeps going up. Now, overall, you're moving into kind of lower vol as you go higher, but that's kind of one of the phenomena we have now. So that is one thing that's going on. So that's also the liquidity providers kind of saying we still expect things to go higher, and they're trying to figure out a way to charge more for puts for people that like buying puts to fill in the gap and stuff like that. So that's from a vol point of view, that's kind of what I see for VIX. Another thing is from, the way I look at the VIX cash is I think the market is looking for VIX cash to go lower at some point. We just need a day to pull back. So what you'll probably see next week is you will see, if the SPX goes down, you will probably see VIX go down somewhat and get us kind of into the mid-nines, which is where we should be with the kind of just sort of straight dead rallying that we've had. But if we keep rallying in one direction, the market vol just can't really go down any farther. That's the reality. So that's where we are. Other than that, most of the VIX futures look relatively cheap right now in the short term. So I would guess the market is looking for that cash to move lower at some point if we could just stop going straight up. But I think that's a tall order right now.
Also, the tall order is getting this freaking service to stop playing these noises. I think I got it tracked down now. That is annoying because we use it throughout the show to disseminate news about the show, and they decided all of a sudden to start just auto-playing ads, which I just love. So I guess no more using of them during the shows anymore, which is annoying. It wasn't annoying, though, at least for you guys, Kevin, and the CBOE folks. We kind of talked about this before, but now we have the numbers in front of us. We talked about this. If you had said to me a year ago, at the beginning of 2017, that we would see the year that we saw VIX, I think the only word really for it is anemic, non-existent, call it what you will, just vol in the toilet the entire year, I would say, what would you expect out of as a result for the numbers, for the options industry, for VIX itself? I would say they would all be in the toilet. It's just been conventional wisdom for so long that you need some vol to generate any interest, let alone in the core product itself. You think you need a little bit of a level of VIX to generate some interest in VIX options or VIX futures. And yet the numbers now coming out from the CBOE from last year, it shows, I guess, no volatility, no problem, doesn't matter. People still want to trade this thing and trade it up. A lot of it, of course, some of it at least due to our friend the Whale, who came back this week. We'll talk about that in a little bit. But the numbers pretty strong across the board in all the primary products over there at CBOE. Of course, we talked recent shows about how the overall industry up about 3 to 4% last year, which was a surprise for a lot of people. And a lot of the numbers coming out of the CBOE looking to pretty strong as well. The ADV and SPX last year, a new all-time high for the fifth consecutive year, 1.2 million contracts. It's up 14% from 2016. ADV in VIX options. Now, this is what's really kind of mind-blowing, listeners. ADV in VIX options, another new record, 722,000 contract. That's up 14% from the recent records there as well. I guess 2014 was the last record out there, and that's up 14% from that. So if you had told me they'd be setting new records in VIX options when VIX spent the lion's portion of the year in single digits, I would have said you were a crazy person. But yet the numbers do not lie. VIX Futures also having a good year as well. A new record for them for the 13th consecutive year. So pretty much every year VIX has been growing. VIX Futures anyway, 294,000 contracts. That's up 23% from a year before. Again, the term structure not really doing a lot exciting last year, slowly eroding, and yet the future is just lighting it up. Overall total volume record as well for the future, 7.1 million contracts, up 8% from 2016. So I don't know, Kevin, I guess it's a good time to be in the vol business, huh?
It is. It has been, and those highlights are kind of a testament to a recipe, and that's sort of a double entendre. Meaning that VIX is a recipe and the one that the exchange has put together to advocate for, to educate people on the utility around around options generally, much more so around index options and around the volatility complex seems to be working. And it is, of course, exciting to see volume continue to grow despite the lack of realized volatility. So, yay CBOE. Hopefully that continues. And I do genuinely believe, I said this last time I was on, that it is a testament to the broader understanding of VIX and the offshoot markets that people have access to, how to use them. And then beyond that, like when we talk more about these roles this week, it does seem like something is pushing what would likely historically have traded OTC into the listed market. I can't say exactly why that is, and I don't think we can point to legislation or regulation, at least on the U.S. side, that has. Also, overnight trading or global trading hours. It does seem like we're getting a bigger pickup in European and Asian trading. So something's working. Hopefully it continues to.
You know what else is working? Let's hope it continues as well. We shall see. It is time for Russell/Kevin's Weekly Rundown.
Now, Russell's Weekly Rundown.
And I guess I gotta get new music now to rotate for the two of you, but that one came out so good. I'm loath to mess with it, Kevin. So no offense, but I may just want to keep that because I don't know if we can have lightning in a bottle strike twice, sir.
None taken.
Right.
So outside of these massive rolls that we've seen this week, the Russell bit or my bit, we try to focus a bit more on the weekly trades. And there weren't a whole lot. Much of the volume was concentrated in your standard VIX expiries. Today, however, one thing that arguably bears pointing out, a whole lot of the Jan 24th, so we're a week and a half out from that thing, a little bit less than 2 weeks, 20 calls traded between 9 and 10 cents, about 50,000. It doesn't look like those were spread. And that's versus a previous open interest around 700. So, I mean, granted, we're talking about almost a doubling necessary for the futures for those things to get interesting, but that's a big number. Outside of that, you saw what was our cash VIX range was 932 to 1085, and the Jan futures 1105 on the high end to 1035, and Jan futures settled this week within a 20-cent range all week between 1045 and 1065. So excuse me if it's a little short, but there's not a whole lot to report.
Well, good thing I didn't change the music for you then, because that would have been a big disappointment, sir. But well done, well done, nonetheless. We've got some good stuff here coming in terms of VIX options. Moving on to the big VIX options for the week. I know a lot of you are asking, was the whale back this week? Yes, Yes, he was. It was a pretty active week for all things VIX options here. Yesterday, I mean, several days this week looking pretty solid. Monday, 1.3 million out there right now. Tuesday is kind of the laggard of the week. Tuesday, 580,000. ADV is looking pretty robust again as well, up to about 723,000 contracts. So fairly strong out there. Wednesday, though, was the big day, the day everyone was focusing on. Our old friend, the VIX Whale, when I roll through the top 10 hot strikes in a minute, you'll see that he clearly was out to play yet again. You can kind of spot the days he's playing. They're huge outliers on the VIX chart. 2.87 million contracts. So you could always tell those. Our friend, whenever they hit close to 3 million, our friend's out there playing. And he was rolling. We talked before. He has that pretty much those same strikes he's been on for months now. The 12 put, the 15 call, the 25 call kind of kicker, 2x on the upside there. And he came in, rolled it on Wednesday as he's wanted to do. Didn't change a thing, didn't change the strikes. He did it for size again. He ended up closing out the jam, then turning right around again, selling a little over $250,000, about 262,000 of the Feb 12 puts, buying about 262,000, so similar numbers, of the Feb 15 calls. And then doing his old twofer again, selling 2x, roughly about 525,000, of the Feb 25 calls. So this guy just loves this trade, loves to put it on, loves to roll it. Well, obviously loves his broker as well. That guy's probably a happy camper every time he puts this one on. So again, pushing nearly 3 million contracts on Wednesday, just kind of ridiculous volume. And there's not many other products out there I could think of off the top of my head that really can come close to numbers like that actually have any real size and notional value behind them, not like a tiny crazy contract. And then Thursday hitting 1 million contracts again. So people really want to get themselves some VIX this week. I guess they took the first week off, kind of relaxing, and now coming back with a vengeance. Even today, looking fairly active. Again, we're a little bit past midway in the session here today, and about 813,000 actually on the tape out here so far for VIX options. So people just can't get enough. Call the put. Mr. Russell's getting a little nervous now. If he was here, it's about 4.1 to 1. So he starts getting a little nervous and sweaty on a usual day after he has his coffee. But when it hits a little over 4 to 1 in the VIX call to put is when he starts getting really nervous. So wherever he is in the jungles of Africa or the deserts of the Middle East, wherever he is these days, I'm sure he's quite sweaty and nervous, worrying about the VIX call to put. And looking at the hot strikes out here, we have, again, our friend just dominates the top 3 all the time. You probably didn't have to listen to what we were talking about before, and you could just look at the top 3 hot strikes and see, okay, our friend the Whale is back, and he has rolled. Feb 25's number 1 with a bullet, 546,000 contracts. Feb 15's number 2, 521,000, and then actually the puts come in a little bit lower on this one. So a couple strikes haven't slipped in there. The Feb 22s doing about 413,000 contracts. The Jan 22, so the 22 strike, pretty popular. Jan 22 is 373,000. The March 22 is doing about 337,000. Number 6 is our first and only put on the list, and it is our friend the Whale coming in with the Feb 12 puts, 321,000 contracts there. Number 7, the Jan 20s, 291,000. Number 8, the comparatively extremely reasonable Jan 16s, 271,000 there. Number 9, the Feb 17s, 257. And rounding out the top 10, the Jan 18s with pretty much just a tick under 250,000 open. You can tell by those numbers, OI, pretty strong out there in VIX land right now, right almost 13, 12.9 million contracts, about 10.3 million on the calls, about 2.6 or so on the puts. Before we roll on from the big mothership of VIX options, Mr. Rock Lobster, anything out there catching? Obviously, our big friend coming to play this week, but aside from him, anything else really catching your eye out there in the big VIX mothership options this week? Or if you want to talk weeklies, I'm sure Kevin won't be offended as well.
I don't want to step on the Russell Spot Thunder, but I did notice a lot of put buying activity, like on the 9.5s this morning for next week. Of course, you're always trying to read the tea leaves for or getting into a VIX settlement, but it seems like there is, the 9.5 puts are nickel bid for VIX. So normally there's some interest in people trying to close those. There was a lot of, you recall, remember we had that 875 settlement which I think was a historic low for VIX, a couple cycles ago. So there's a little more interest in these 9.5 puts now than I think normally there would be. So that's that to me kind of caught my eye. Also, there was, and I don't know if it was just an anomaly, but pricing in the Feb 21 cycle, Mark and I were looking at that yesterday. That future looked a little kind of relatively expensive, at least yesterday. It seems to have come off a little bit, but those are what I would say the two. Those are the two I just call VIX items that we're looking at, besides just the whole future curve looking relatively inexpensive out till just the February ordinary cycle. So there is not a lot of bid for future action as of right now. I mean, if I'm telling you 1147 for the Feb 14 future, it's hard to believe it gets that low. 2 years ago, you would never say it would get that low this quick, but yet here we are at a 10 VIX, and there it is. So the premium seems to, at least for now, it looks like there's an expectation of lower VIX. That's my opinion, and I'm sticking with it.
Well, speaking of opinions, there's no shortage of them out there in the vol space, and we have some interesting stuff. We talked about some of the data. They sent us over just a whole rash of data this week. Cowen Company getting in. It's like they're getting pretty active in the earnings and just general volatility research. Which to that we say, hey, the more the merrier. More firms should be doing this research and sending it to us so we can talk about it because it's surprisingly little. I mean, how many times have we said, Mr. Rock Lobster, that there's pretty much no straddle studies for earnings out there worth a damn, except maybe the Goldman one from like 5 years ago, right? Pretty much the only one we have to refer to, right?
Yeah, isn't that our kind of gold standard for the earnings strangle test? There's a lot of people that let's just say do a lot of mentoring on selling those earnings strangles and then kind of devices to help you get out of your problems, things like that. But mostly right now, going into, I mean, it's so early in the cycle, but I'm telling you, the best trades really have been just buying all the juice prior to earnings and then just riding the stocks up. I mean, it's still it's trades I have on right now and people in our chat room have on, and they've done well. So I mean, the reality is you get much less decay for a short period of time. And if you get much less decay and you get anything close to normal movement or even a little above, you have trades that pay.
I'm looking here.
So,
oh yeah, go ahead. Finish up.
Sorry. That's what I said. That's what I mean.
Speaking of movement, you would maybe I'm putting words in your mouth. Maybe I won't have you. Maybe I won't assume for you. I'll allow you to express your thoughts as the nice host that I am. If you guys had to think of it right now and you said, let's think of earnings weeks versus, big earnings weeks, not little ones, versus regular, S&P earnings weeks, which would you think would be more volatile? Maybe Kevin, we'll start with you.
I'm sorry, we're comparing a busy earnings week to what?
Just a regular, every other week of the year kind of thing. So earnings weeks versus every other week of the year, which set do you think has more volatility?
I would say that it's pretty normalized. That I mean, you're kind of baiting me to say the earnings one, but I think over a long time frame that they would be fairly similar. That your normal unbig earnings week is your distribution is pretty similar to an earnings week.
I have been known to bait once or twice in the past, and maybe I'm doing that right now. We shall see. Mr. Rock Lobster, what say you, sir?
Are you trying to cast the line out there?
Just maybe. I'm been known to fish once or twice.
I mean, I guess the only thing I could say about the whole earnings thing, and I'm not, is I think the basic problem, and I'm actually just going to go something slightly off and saying Black-Scholes, the way option model is priced just in general, has a hard time with a one-day event. It was never meant to price a one-day event. So when everybody says, oh, it's 100 vol, it's this vol, it's that vol, it's going into a model that was looking for a long, kind of a smooth period of time for volatility. So it's not. So a lot of stuff you see for earnings, it's really hard to, let's just say, 100 volatility doesn't necessarily mean 100 volatility for one day. So what I will say on all this is, I would guess that into earnings, you actually have almost more vol, or you have more realized vol before the earnings cycle than you do once we get into it, because just I think from observation, there's a lot more broader volatility, there's broader realized vols. Everybody gets a little euphoric end of the cycle. Then once the news starts coming out, all that tends to damp down, and then all of a sudden the individual stocks kind of go in their direction. So, anyway, that's my thought on this.
You guys would do well
doing
a political debate. I've never heard more hemming and hawing and hedging in my life for a very simple answer. No, I think a lot of people have the conventional wisdom that earnings weeks maybe would be a little bit more volatile. Actually, when the Cowen Company sent us their data, they came at it from the other angle. They thought actually, I think I can see a logical argument for both sides. Actually, their argument was that because of the dispersion trades going on during earnings week, they actually expected muted volatility during earnings week and ETFs and indices. We're talking broad ETFs and indices now. So they went and ran the data for 5 years covering the past 20 earnings cycles or so. And they looked at it different, because obviously there's different people reporting different times. So they broke it down into different buckets. 10% of effectively, the big different thresholds of names reporting, 10%, 15%, 20% of the big, S&P names, all the way up to 25%. And looking at this data, it's kind of interesting. And I guess their supposition was right. The earnings weeks are actually a lot more muted compared. Again, the subset of this test is, the subset of earnings weeks, of course, about 26, versus pretty much all the other non-earnings weeks. So you're talking about, in these numbers, about different years, obviously different numbers, but around in the 25% reporting, they're 236, and so on, a little bit lower as you get down the rabbit hole a little bit. But in all these tests, pretty much there was a marked difference in terms of earnings weeks, with the largest decrease, talking about average 5-day realized vol, so the actual vol exhibited in the marketplace during the 25% of names reporting. That's when it was the most muted. It was about almost a 1.5 point spread between the non-earnings weeks being much higher in terms of realized vol than the earnings weeks themselves, and it gets a little bit tighter as you go down the rabbit hole. The one outlier being 15% reporting, so 20% the spread is about 0.7, again higher for the non-earnings weeks. 15% the spread is about 0.85, and about 0.5 or so for 10% reporting. So a little bit interesting stuff, and not a way that I had seen that analyzed before. Again, there's such a dearth of data in this space that anything is kind of welcome at this point. But still, interesting to see that. I don't know, Andrew or perhaps Kevin, the way you two kind of hedged your bets there. Maybe you're not surprised at all, or maybe you are surprised by those findings. Mr. Kevin, maybe we'll start with you. Does that surprise you?
No, not really. I think the point that Andrew made about option models being maybe an inappropriate way or barometer for very short-dated events is an appropriate one, because the straddle is a number, and volatility is just the fact that you're not seeing decay on things that would likely otherwise decay, accepting something like an earnings number. And I think if you get, I don't know, I like the old saying, lies, damn lies, and statistics. If you pull together enough data, you can kind of make it look any way you want. Or maybe I'm a simpleton to think that, but the short answer is no. That doesn't surprise me a whole lot.
Mr. Rock Lobster, are you surprised, sir? Or are you still going to maintain that that Black-Scholes is nonsense?
Well, it's not that it's nonsense. It's just it's nonsense when you're trying to model one day. It's like, whatever it is. Yeah. But it looks like the Cowen data is not very far from what I kind of observed over the years, where you actually have a little bit of a run. If the market's kind of, woohoo, we think earnings are going to be good, they kind of bid everything up and everything's sort of there's a little bit of a rip into it, especially on a bull market like we've had lately. And then after the earnings come out, actually, you know, stocks go up and down, and one stock up, one stock down. That tends to dampen the vol. I always remember actually once the earnings start coming out, just feeling the vol sinking everywhere. So that their report does not surprise me from an observation point of view. Plus, you know, it almost agreed with what I said. So what the heck? I gotta say, wow, I like it.
There you go. You can always tell a genius because he thinks the same way I do, right? So there you go. Genius.
That is definitely the hallmark of a genius.
Exactly. You always know a genius because they're so insightful and deeply similar to what you think. A lot of people asking. People have asked us all week. We got it going on in the chat right now. Who is this? Options Queen saying, "What about Bitcoin vol?" We'll get to it. We're getting there. Give us a second. You guys are just got Bitcoin on the brain. Yeah, we finally, you know, it's nice. We would joke. How long we were joking about this? Oh man, wait till we have the COT reports on Bitcoin. I can't wait till we have COT reports on Bitcoin. Guess what we got now? We've finally got COT reports, aka Commitment of Traders reports on Bitcoin, because we have futures. When you have futures, you get those COT reports now, which is kind of nice. We don't. I don't think we have them for the CME one because they don't have enough. They didn't have enough unique traders. Again, that's a big, meaty contract. It's a 5-coin contract. So a little bit different beast going on there. But the CBOE is included in the most recent COT report. Our boy Russell, who's, again, lurking, I think, in the frozen tundra of Norway right now. He had a good write-up on the CBOE blog. Check it out, listeners, if you haven't done so already. He has a great breakdown, visuals and everything, of all the fun here on the futures coming out of the COT. Remember, COT report, bit of a lagging indicator. It's usually a week or two behind. So this data, that data was from the COT report was issued the 5th. It was from data from the 2nd. So you're talking a little bit back now. So bear that in mind when we're talking about this. But all sorts of good breakdowns here. You know, the COT report breaks it down: commercial, non-commercial. There's also a surprising number, I guess, of non-reportable positions, but I guess that makes sense. You got a lot of small players floating in and around the Bitcoin space, so a lot of those wouldn't be out there. A lot of people also speculated it would just be size short all day when these futures came out. As of this report, there were about 3,044 short Bitcoin futures positions and 1,356 long Bitcoin positions. Again, these are the non-commercial traders. It's high, but it's not perhaps quite as high as some people assume. They might have thought everyone would just be hitting the bid the second these things were listed. And we did see a little bit of that, but then it seems to have kind of evened out quite a bit. Again, Russell has a whole long rundown. I don't have the name of his article here. But again, head on over to the CBOE website to search for Russell's name or search for Commitment of Traders and Bitcoin. I'm sure it'll come up. Again, he has great visuals that I can't really do justice to here, but a good breakdown of that. I don't know, Kevin, this is obviously you guys are probably getting a lot of questions over there in the Options Institute about all things Bitcoin these days. Did this COT report, did that have any surprises for you? And what are your thoughts on these general, recent weeks of all things Bitcoin, sir? Been moving a little bit again, as it is wont to do.
It is. I think keeping that in mind, that Bitcoin's doing what Bitcoin does, and that's to say there is some meaningful underlying volatility in the product. Volatility is not a 4-letter word in this world. You need to understand the risk you're assuming, but it's also something that you can harness. So futures were listed, traded for the first time December 10th. So we're pretty much one calendar month out, and this will be the 5th trading week. Three of them were shortened. And we've seen, I don't know how to characterize what you expect for volume, but fairly consistent. I'm happy to see that the CBOE contract is arguably winning in notional terms, and we have a wide aggregate of players in the Bitcoin futures, and the underlying market, the high to low range on the futures is 45%. Most weeks we've seen an average interweek volatility or high-low range of about 20%. This week is a little bit higher. So it's exciting. I think the longer this goes on and the bigger foundational base we build, the better off it is for the whole kind of crypto universe. But things like the Kodak news this week and like the MoneyGram partnership with Ripple and seeing the impact that just headlines like that make on individual equities reminds me a little bit of the late 90s, early 2000s. I'll leave it at that.
Another interesting nugget from this report, too, because they break down things. There's not obviously a lot of, wiggle room here because there's not a lot of non-reportable positions. They can't determine what these people are, what their origins are, that sort of thing. But there were about 39 unique reportable traders included on the Bitcoin's CBOE Bitcoin COT report. So there you go, 39 reportable traders out there probably doing a little more sizable positions, a lot more unreportable there that probably doing different stuff that they can't really report on. They fall into that bizarre kind of gray area, the non-reportable positions category, but there's a little more data. Mr. Rock Lobster, any of your hardcores in your pit chat slinging these products, and what are your thoughts on these opening weeks and these numbers and the volatility exhibited therein?
I think what he said previously was like Kodak using blockchain technology to encode pictures, and that stock is up from $3 to $12 in about 3 seconds, I think. Anything remotely resembling, it's back to 873. So anything remotely resembling a connection to blockchain technology, that's mostly, it's one of those things I looked at Bitcoin about 4 years ago or 5 years ago. I think, remember when Cyprus went bankrupt, and I think Bitcoin went from $60 to $110. And like I said, we had clients that were mining it, and I just had forgotten about it really. And then all of a sudden, this year it was like $1,000 or a year ago. And by then I figured, I missed the boat, and then it's $14,000. So as far as the Bitcoin itself, I can't really, it's like once I've missed it, I kind of leave it. However, every time I see the blockchain stuff come into stocks, or, like trading the CBOE, trading the CME, and where there's a chance for outsized vol on the equity products, that gets me interesting because, I like my juice. But anytime I can really see anybody that can tar any equity with Bitcoin or blockchain, anything, it just blows up. So I think maybe for people that don't want to spend $14,000 on a Bitcoin, stuff that's related to blockchain technology and the volatility that comes with it, that's a little bit more in my wheelhouse. So I tend to stick in my wheelhouse, and stuff that's just on the fringe like that, I nod my head and say okay, and I missed it. That's the way it is.
It's okay. There's no shame, sir. A lot of people missed that run up. It was easy to actually, you could have been very early. I mean, obviously, if you own the asset, you were early, but people were trying to make products out of Bitcoin for a while. I know the Nadex guys several years ago launched, more than that, almost 3 years ago, launched a Bitcoin product, a binary, and no one cared. They delisted it. So it seems like if you didn't get going in the last 6 or so months, that's really when the heat took off. Anything prior to that, in terms of creating any sort of tradable product or interest in it, there really wasn't anything there. So you're right. It's very, very immediate that all the interest is. Speaking of interest, our immediate interest always comes to your questions, listeners. You guys got a bunch of them. So let's get going into the volatility voicemail.
It's time to share your thoughts and opinions with your fellow volatility traders. It's time to check the volatility voicemail. Make your voice heard by dialing 779-669-4VOL. Posting a comment on the optionsinsider.com, sending an email to questions@theoptionsinsider.com, or posting your questions to twitter.com/options or facebook.com/theoptionsinsider.
All right, let's get some of your questions. All you guys chiming in on the chat. The Options Queen asked about Bitcoin vol. We already talked about that. Brendan, he just wants to say, hey, Mark, et al. Just wanted to say thanks for the sweet multiple E's, a golf shirt someone in your office sent my way. Everyone in my Options meetup will be jealous. Well, we're glad to do it when we have good listeners who ask good questions. we reward them with fun, very exclusive options insider gear. Only people who really have that are us here on staff and a handful of people on the network, like Mr. Rock Lobster has one. And you'll see quite a few heads of big firms in the industry who always bug me for shirts, wearing those as well at conferences and things. And a select number of listeners over the years who have written in with interesting questions. So you obviously were counted among them, Brendan. So well, oh, Mr. Mark Brandt floating in there too. Vol, where art thou? Absence makes the heart grow fond. There you go. Yeah, nice to see a VIX somewhere in the remote double digits range for at least for a little while here. But it kind of brings back fond memories. Speaking of fond memories, or perhaps fond looking forward thoughts here. We asked you guys this week. You guys obviously love earnings season. Earnings season starting to kick off actually today with more JP Morgan and a couple other the financial names popping off today. The big stuff coming in subsequent weeks. You guys always love earnings season. You're always writing us in asking about earnings season volatility and things. So we thought we'd kick off this week asking you guys, hey, quick, easy, giving you easy questions to start off the new year, starting you off easy. And we asked you quite simply, we know you guys love to trade options during earnings. Which names are you looking forward to trading in the upcoming earnings season? We put a couple there, or you could choose your others. We gave you Apple, Tesla, Amazon, or other. Already for the others, we've seen a bunch of people writing in, your Facebooks, your Google. One guy wrote him some Watt, W-A-T-T, the other day. So we get some weird esoteric ones in there as well. Maybe Mr. Rock Lobster, we shall start with you. Which of those three, if you have a favorite, or maybe you have something else, if you have something else, feel free to chime in. And then more importantly, what do you think our audience is pulling for?
Let's see. I think, at this point, I have to move to Amazon. And just because of it's $1,300. I think Tesla's always a bomb in earnings. So I don't think that is going to do very much. But I think now Amazon has just passed Apple as the flavor du jour, as much as everybody likes their iPhones. But Amazon is just since Amazon still doesn't make real money yet and just kind of keeps growing, but that's still I think that gets everybody's fancy. So I'm looking at Amazon because I couldn't see anything good in Apple. And I think that's what people are going to be looking at there.
So your personal vote is Amazon, just so I know they have this right, and you think people are voting for Apple. Okay. Just trying to parse your parsing there. And Mr. Kevin, what is your vote if you have one? And then what do you think our audience is voting for?
So I think that first of all, I am not personally much of an earnings trader. It's not something I've ever really tried to benefit from. So unless it's something I'm super comfortable with, I tend to stay out of the options market around earnings. That's just my personal experience. Your question, however, I mean, the Amazon thing, it is amazing. I have never once traded an Amazon option because I just don't get it. And I am grown up enough to admit that. I would have gone broke 15 times over trying to bet against Amazon. But they just continue to go higher, up another 2% today. It'll probably be Apple just because Apple is worth a gazillion dollars, and they will continue to be the most valuable company around. So that would be my guess, but it's not based on anything other than size.
So we got 2 votes for Apple and then 1 personal vote for Amazon. Looks like the audience is moving to Amazon as well. 34% giving the love to Amazon, which is kind of interesting. Again, kind of reflecting maybe the new age you're in. A few cycles ago, it would have been Apple, or we have Tesla on there too. Tesla coming close, 28%, but can't outdo the Amazon love. 21% for Apple, 17% for other. We got a bunch of names for other. No real huge consensus in the other names that I saw. Let's see. We got some questions. I guess an interesting one here from Duff Gordon. Duff Gordon wants to know. It's a bit of a lengthy one, but it's interesting. My wife reads all of the Intel letters and told me tonight that CEOs are resigning in droves. The best way to see if this is valid or probable would be a sudden burst of buying, of insider puts. Is there such a reporting requirement for insiders or recent exec higher-ups which I would expect the SEC to require. But all we hear is insider stock ratios, etc. But the long put after 23 years of on-floor trading is the, quote, no-brainer thing to buy. If one is fairly certain the stock chosen was going to go down, because the 98% winners who risk the entire economy when they sell short puts with abandon need to buy them back one day at a volatility no one could believe ahead of time, as in right now. The insider who quits Apple may buy puts on Amazon so as to go under the radar. Major sells perhaps on other stocks where the insider who quit quickly knows of another big player who has quit. Finally, what about, quote, insiders in or recently of a company buys calls in the VIX? How does that get reported? How long after resigning from a company do you have to report? I suppose as long as he is above 5% of the company he has resigned from. Thanks much. I should know all of this, and that is perhaps conspiratorial. Yes, it is a little conspiratorial there, Duff. Maybe you've been reading a little Zero Hedge or some of the other outlets out there. But let's start with the end question and maybe work back. The top one, do the top one really quickly. Yeah, most of these big execs are prohibited from buying puts, or if they do, they have to disclose them well ahead of time. It's just, effectively, the SEC knows that game by now. They know if you're buying puts, it's equivalent to shorting the stock, so they're not going to let you go out there and just run amok and buy puts. Any sort of short or sale considered position, they'll have to report, or they could be prohibited from doing. We saw the big issue with Intel recently. The Intel CEO unloaded most of his stock, but he said he did it in a programmatic fashion. He set up the trading system ahead of time. You usually have to set up these rules ahead of time so they know exactly what you're going to do. Still didn't look good for him because he did it with full knowledge of a bad flaw in his company's products. The second part, though, is kind of interesting. I know buying puts on Amazon for an Apple CEO leaving. I don't know how much there really is for that, but buying VIX calls for an insider if a big component of the S&P is going to resign and therefore tank the SPX and therefore pop VIX. That's a pretty lengthy conspiratorial road to go down. I don't know, Mr. Rock Lobster, you live in the hinterlands. You've been known to like a conspiracy or two in your day. What do you think of that? Think of buying VIX calls because an insider buying VIX calls because he knows something or he's about to resign and he knows it's going to tank the SPX. And is the SEC, are they that savvy, sir?
I'm putting on my tinfoil hat right now, and I'm spinning the propeller as we talk. There was always there was the Bin Laden puts. Remember the Bin Laden puts? And, maybe there's some Kim Jong-il. I don't think they're that savvy to buy VIX call spreads or calls. I just don't. I even with my tinfoil hat, I think that would strain the neurons in the tinfoil hat to get to see anything like that coming out. I think most of the insiders really now have to sort of telegraph their sales ahead of time because they all have to file a report. So I don't think it, although there could be times that some guys just try to rush stuff in if they hear bad news. That's always possible. But the SEC tends to find them. So I'm going to say I don't think that this is a widespread thing, but I could be totally wrong. A guy buying and a guy leaving a company and buying VIX calls, I think that would strain the correlation factor a little bit.
This is pretty deep in the conspiracy weeds, which makes it kind of fun. I don't know, Kevin, put on your tinfoil hat as well, sir. You got a lot of questions at the options too. I'm not sure if you ever got anything this conspiratorial, but what do you think about that? Some big insider, he knows he's going to tank the S&P, so he loads up on VIX calls.
That particular tinfoil hat is a little bit too tight for me to put on. I hope a whole lot of this goes on because it would be good for VIX volume, ergo good for CBOE. And I must point out that when you get conspiratorial type questions, an outsized number come from at AOL addresses. I will leave it at that.
Yeah, you do get a lot of those interesting ones from the AOL addresses. They're living in the yesteryear of the internet, but that's okay. We love them too. We love you all. We got to keep rolling, though, into our final segment. It is time for us to embarrass ourselves yet again. It is time for the crystal ball.
It's time to peer into the future and reveal what the volatility gods hold in store. It's time to look into the crystal ball.
All right, this is, of course, the portion of the show, listeners, where we try to wrestle the slippery pig that is VIX Cash, anyway, and we see what we were thinking. And let's see what we were thinking last week as we pull it up. And we were all actually a little bit low. I was the lowest, so I was feeling the least vol last week. I know Mr. Meatball was very angry because I scored his guess that he wanted. So he ended up, I picked 9.25. Mr. Meatball took umbrage at that, and he ended up going 9.57. And then Russell, surprise, surprise, the highest of the bunch at 9.79. So he doesn't win, but Kevin gets it in his place because he gets the reflected Russell love when he's not here. So Russell, by default, it's pretty close. We're at about 10-10 here, wrapping up the show. So about 0.3 of a handle. So it's not bad in VIX land. Not a bullseye, but it's not terrible either. So, Mr. Kevin, you get the pride of place. You get to go first, sir. What are you feeling for this time next week? Are you feeling still in the double digits? You feeling getting back down, maybe an 8 handle? What do you got on the horizon, sir?
Can we just talk for a minute about a high bid in the VIX market below 10? All right, that's the world we're in right now. If we go 2 more weeks without a 5% pullback in the S&P 500, it'll be the longest run ever. With that said, my bid will be 975.
There you go. You know, Russell was kind of joking about that. He mentioned that he was finally capitulating. It was this 2017 just broke him. So for 2018, he was moving himself much lower. A typical Russell guess would have been probably, 11.5, something in that range. So he was on the ridiculous upper end for the entirety of 2017. Surprise, surprise, he did not win our crystal ball contest for 2017. So he's trying to change his game. So that was him aiming low, 979. It worked out all right for him this week. Mr. Rocklobster, I'll be charitable. I'll let you go next, sir. What are you feeling for next Friday at this time from VIX?
I'm just saying market there here. I'm going to go 995.
Oh, jumping a little bit north, playing the Russell role here on the show, going a little bit north. You know, the flirting with the double digits does have me stroking my chin in wonder this week, but I'm going to go back. I'm going to go back to, I'm not feeling quite as low as last week, though. I'm going to say, we're going to be a tight range this week. I'm going to say 955 on the downside. So a little bit tighter market than usual. Usually Mr. Russell is way the hell out in the weeds. Me or the Meatball are probably somewhere lower and somewhere's located in between. So interesting, tight market this week. All right, everybody. That music means we're done, at least for Vol Views. But don't worry, if you are listening live, you'll get a little bit of a treat in between. You get maybe a nice, fun Playbook Radio. I think you're actually going to get a nice interview talking with the guy who runs the specialist company for all things VIX. Over there, VIX Options at least, so stay tuned for that in a little bit. And then I'll be back with my cohorts in about half an hour or so talking all things commodity volatility. Maybe you'll get a little bit of Bitcoin love there too, no promises. Spoiler alert, you probably will when we talk on TWIFO in about half an hour. But before we do that, let me go back around the horn here with my cohorts, my partners in crime. See what they got cooking here? Russell. I got the whole show almost without doing it. I did it the last second. Kevin, I mentioned Russell's blog earlier. What else you guys got cooking over there on the CBOE blogs, and what else is cooking over there in the Institute?
That is a very worthwhile blog, and pretty much everything when he puts electronic pen to paper is worth reading. We continue to talk about, educate people on Bitcoin futures, the first Bitcoin futures expiry cycle. They will cash settle this coming Wednesday. So that's of note. And big picture, it's worth talking about what's going on in bond land. What's up with the 10 years? Are we going to move back towards 3%? And the flat term structure in fixed income land. One little tidbit, I like tidbits. The 2-year yield, the U.S. 2-year yield is higher than the Greek 2-year yield. That's wild. I'm done.
There you go, dropping the mic on Greek 2-year yields. Who'd have thought That could be a mic dropping moment. Mr. Rock Lobster, can you meet or exceed that, sir? What is cooking in the land of the pit / Prime Meridian funds?
Our new Prime Meridian funds. Our second fund, which will be quite awesome and unique, I might add, will be coming out, I think, February. So you can look for more of that. My Vol newsletter will be coming out February 1st, finally. We just got our website up and running to do that. So if you want to learn how to trade vol, manage the vol trade, we have been running it inside of Option Pit since October 28th. I think I have 12 trades, 10 wins, 2 ties, no losses. So that's not a bad start. So I have all the trades and everything. Everything's documented. So it'll be the first newsletter. Basically, we're only putting stuff out where we feel there's vol edge, in either VIX, SPX, or any of the vol products, and then showing how to manage that type of position. So I think it'll be cool. Our subscribers like it, and I hope new people will too. So again, past performance, no guarantee of future performance, but we'll see how it does.
There you go, listeners. Check it out over there on optionpit.com, where you can find all of their goodness, including everyone's favorite, the Prime Meridian funds. And with that music, listeners, I'm going to take a little break. I'm going to hop off the microphone for about half an hour. You're going to hear some good stuff. Like I said, stay tuned for my interview with the CEO of the firm that does all of the market making for VIX and a lot of the other products you may like to trade. And I'll be back in about half an hour to talk about all good things commodity volatility on TWIFO.
Volatility Views is brought to you by CBOE. CBOE is one of the world's largest exchange holding companies, and we're inspired every day to innovate some of the industry's most powerful products, technology, and solutions. We're the industry's leading force driving access to global markets. A better trading experience and powerful data and analytics to inform better strategies. We're committed to engineering new ways to help our customers realize their potential and navigate the marketplace of tomorrow, today. Visit CBOE.com. That's CBOE.com to learn more about our expanded offerings.
The preceding program was a production of the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, facebook.com/The Options Insider, or via questions at theoptionsinsider.com.